As we move forward and we believe the Fed will be normalizing interest rates, we think there's a real opportunity in a number of different asset classes, especially for income-oriented investors. First, on the fixed income side, we do think there's attractive prospects for capital appreciation as interest rates broadly decline. That includes U.S. Treasuries, investment-grade corporates, and even high-yield securities, which can benefit from the fact that the economic outlook will be improving and a recession would be avoided. Now, these securities have two things that really are beneficial. One, and this has not been the case for quite some time, the current income is actually quite attractive. And as interest rates normalize, come down, the prospects for total return are quite good in those areas within fixed income. Within equity markets, we think there's a broader cohort that's been somewhat left out of this recent rally that's really been driven by a very small group of technology, AI-driven companies. Many of the companies in the market, we think benefit from that normalization of interest rates and the economic outlook improving. We do see income opportunities within the equity market that also can deliver some attractive total return. I think there's a real unique advantage in investing in a multi-asset, balanced income-oriented portfolio today. And really that centers around a very broad opportunity set. When we look at fixed income, many of those sectors still bear the marks of a very difficult 2022 where bond prices fell precipitously. That leaves those securities offering very attractive current yields today, while also trading well below their face value. As the economy evolves and the Fed is able to reduce interest rates, we think those securities will not only provide attractive income for a multi-asset balanced approach, but also deliver some attractive total return. Now, on the other side, looking at equities, we've had a very narrow cohort of technology, AI-driven companies that have led the market to record highs. When we look more broadly across the equity market, we think there's a substantial amount across a range of different sectors that have been left out to some degree. And we think those companies offer not only income, but also the prospects for total return as interest rates normalize and the economic outlook improves. As we move forward, we think there's an opportunity to bring more balance into a multi-asset portfolio. We've really been focused and overweight some of the opportunities with fixed income. Over the past year, a lot of that was to protect against the possibility of the economy falling into a recession. But as we move forward, the expectations are the Fed can reduce interest rates and the economy can ultimately move higher. That's an area that we'll want to have some more equity exposures in the portfolio. So right now, the team's very focused on finding opportunities, particularly from the cohort of companies in the broader market that have not necessarily participated in the recent rallies that have taken equity markets to all-time highs. We think there's a lot of attractive income-oriented opportunities within the equity markets that will benefit from interest rates declining and offer us attractive total return going forward. As we look at equities, the recent rally to record highs for indices like the S&P 500, we think have been quite narrow. They've been led by a smaller group of companies. While there's been some broadening away from those magnificent seven, technology mega cap companies that are viewed as benefiting from the trends within AI, we think there's a broader cohort that has been more challenged, that is not showing tremendous growth and is trading at much more reasonable valuations. As we move forward and we ultimately see the Fed normalizing and reducing interest rates, we think there's opportunities in a range of sectors and have been picking up new ideas within technology, but also within consumer staples, within discretionary, within healthcare. So that's really our focus, is finding some areas of the equity market that have not necessarily participated that we think can perform quite well over the next 12 months.
请上网搜寻富兰克林存基金。 投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书。